Welcome back to Explain the Charts, where we analyze charts and news for you. Today, September 20th, we're going to go over the SPY, the S&P 500, and try to see if there's a reason to be bullish or bearish short and long-term based on what the news is saying and what the chart data is showing us. So let's start with the news. The S&P 500 is up over 20% year to date, a truly remarkable performance, especially in the face of the Federal Reserve's recent rate cuts. The Fed has slashed rates, the first time since the pandemic, to try to ease economic pressure on consumers and companies. This is a risky move by the Fed and has the potential to be inflationary, undoing the progress made in fighting high prices. Many seasoned investors are cautious, pointing to the index's inability to hold on to its gains following the Fed's previous moves. The Fed has cut rates with stocks near all-time highs 20 times. The S&P 500 was higher a year later 20 times. So the Fed cutting rates historically has been a good thing for the market, but that doesn't guarantee it'll happen this time. It's a very interesting time for the market, with the Fed continuing to cut rates in 2024. They are forecasting unemployment to rise to 4.4% this year, which has some people concerned about the strength of the labor market. This is a volatile situation, with the market reacting with a surge in optimism, but with underlying concerns about the Fed's moves and the job market. Now, let's look at the charts to see what they're telling us. Let's start with the daily chart. If we look at the SPY's daily chart, we can see that the index has been on a tear, reaching a new all-time high above 5,700. However, it is important to note that the index is currently trading near the top of its range. If we zoom in on the last few months, we can see that the index has been trading in a fairly tight range. The index has consistently tested the 5,700 level, but has yet to break out. This suggests that there might be some resistance at that level. Let's move to the hourly chart and see what it's telling us. The hourly chart shows a similar pattern, with the index trading near the top of its range. We can see that the index has been consolidating around 5,700 for the past few days. The index has been bouncing around the 5,700 level. We can also see that there are a lot of short-term trading opportunities on the hourly chart. For example, on September 19th, the index rallied sharply, breaking through the 5,700 level. However, it then retraced back below that level. This type of price action is a good indication of short-term resistance, but let's look at the 15-minute chart for more detail. The 15-minute chart offers even more granular insights. We can see that the index has been making a series of higher highs and higher lows. This is a bullish sign and suggests that the index is still in an uptrend. However, we can also see that the index is currently trading near the top of its range. The index has been consolidating around the 571 level. This suggests that there might be some short-term resistance at that level. If the index breaks out above 571, it could signal a continuation of the uptrend. However, if the index fails to break out, it could signal a short-term reversal. Let's go back to the daily chart and see what the overall picture looks like. The daily chart shows a more long-term view. We can see that the index has been in a strong uptrend for the past few months. The index has broken through a number of key resistance levels. The index has closed above 5,500 and 5,600. The 5,700 level is the next major resistance level. The index is currently testing that level, and it will be interesting to see if it can break through. Looking at the daily chart, a break above 5,700 would signal a strong continuation of the uptrend. However, if the index fails to break through 5,700, it could signal a correction. A correction is a decline of 10% or more in the market. We can see that the index has experienced a few corrections in the past year, but it has always bounced back. It's important to remember that the market is cyclical and corrections are a normal part of the market. To recap, the SPY is currently trading near the top of its range, both on the daily and hourly charts. The 5,700 level is a key resistance level, and a break above that level would signal a continuation of the uptrend. However, if the index fails to break through 5,700, it could signal a correction. On the 15-minute chart, the index is currently consolidating around the 571 level. A break above 571 could signal a continuation of the uptrend, while a failure to break out could signal a short-term reversal. Ultimately, the future direction of the SPY is uncertain. However, by understanding the current news and analyzing the chart data, we can gain valuable insights into the potential for a correction. Remember, the market is constantly changing, so it is important to stay updated on the latest news and chart data. Thank you for watching, and don't forget to subscribe for more chart analysis.